Did the housing market crash in 2025 in Bryan and College Station? Will it crash in 2026? And what is going to happen with mortgage rates? Those are the topics we're going to cover today on your housing market update for Bryan and College Station, covered on your favorite channel, Investing in Bryan and College Station, where it's my goal to grow your wealth through real estate right here in Aggie land. And I think the best way to do that today is to let you know what is going on in our local housing market by providing you the most up-to-date data. So let's jump into your housing market update. I mentioned this is the housing market update. Stay tuned, it's a good one. Today, we're going to cover a lot of data. I'm going to share with you our monthly data for December 2025 compared to 2024. Then we're going to look at annual data, aka the entire year of 2025, comparing Bryan and College Station to the great state of Texas. And we're going to see what trends are occurring that might shape 2026. So let's start off with that monthly update. What happened in the Bryan-College Station Metro December 2025, based on the most recent data released from the MLS. And the truth is, we continue to see some trends that we've seen in the past, and we've seen some things maybe shift in another direction. So our median house price up 1.5% year over year for that month of December, $327,400. Closed sales are now 236. That's down year over year, consistent with a slowing market. Active listings are up year over year by 17.3% at 1,206. Now, this is where we see a slight change. You see, we're looking at monthly data, and month over month, we've seen these active listings increase. I'll highlight this here for you. You can see on this chart here that we've been increasing for the last few months, but in December, we had a decrease compared to November of 2025. So less active listings would indicate the possible shift back to a seller's market. Let's jump into months of inventory. This is your classic seller versus buyer's market. In Bryan and College Station, anything over about 4 months is gonna feel like a buyer's market. At 4.4, we're well in that side of the months of inventory, meaning that at 4.4, most sellers, most buyers are gonna feel like the buyer has the upper hand. Now, what's interesting is we are up compared to last year where we were at 3.9, but we are down from November where we were at 4.8. So at 4.4 months of inventory, we could be shifting back towards a seller's market. But the truth is, this is just 1 month's worth of data. It's not enough to really move the needle, in my opinion. So this is something that we will want to monitor, which means you need to subscribe to this channel so that next month when I drop our next market update, you can find out if this is a trend or a one-off blip. Speaking of trends, let's look at a trend that encompassed all of 2025 and see what happened in Bryan and College Station. Let's start off with the Bryan and College Station Metro. We saw appreciation. The median home price for Bryan and College Station in 2025 was $318,000, up 1.2% year over year, 24 compared to 25. And this is something that I want to harp on, guys. In Bryan and College Station since 1990, the average median home appreciation, that's a mouthful, but our average appreciation for well over 35 years has been 4.96%. We are a very strong appreciating market, and we've only had 4 down years in that entire stretch, and none of those down years have been more than 1%. So I am here to tell you that we have a very resilient market, but 2025 was not a great year. Because of course, if you're averaging nearly 5% appreciation and you only appreciate by 1.2%, that is a very slow year. But on average, we didn't lose money, and that's good. Closed sales are up. That's what we expect. Closed sales are up. That's not what we expected. That shows that we had more activity in 2025 compared to 2024. That is actually surprising. For a very slow year, the fact that we did have more closed sales is a good sign. We still have buyer activity. What trumped that, though, was the fact that active listings were up. This is the story for the entire year. The amount of inventory, the amount of active listings are significantly up at 1,244. We're up 18.1% from the year prior. So there are a lot of houses on the market, a lot of houses to choose from. And quite frankly, this competition is one of the reasons why our price appreciation has been relatively slow. Again, buyers have the upper hand, which brings us to months of inventory. I already explained what that is. The average 4.4 up by 0.5 months compared to the year prior. Guys, as you're looking at this data here, just know the important lines we're looking at. The blue line here is your median price growth. It's a 12-month moving average. The lower the line, the lower the appreciation. And you can see since about, really for the last 2 years, we've been relatively low, under about 2% for our median price growth. So that just shows that houses aren't appreciating very fast right now. And this is a national trend. This isn't a local issue. The red line down here in the second graph is an indication of our active listings. And you can see we're at a 10-year high for 2025. Again, this is a trend that I've been highlighting over the entire year. Every monthly video, every market update that I've had, I've highlighted the increase in active listings. Great. That's what's going on in Bryan and College Station as a whole. But who won the year? Is Bryan or was it College Station that came out ahead saying, hey, we are the most appreciating and strongest housing market in 2025. Well, I am here to give you the results. Let's start off with a crowd favorite, College Station. Of course, technically the home of Texas A&M, but if you know anything about the Bryan-College Station Metro, we are one big happy metro with a little bit of friendly competition. So College Station actually didn't have any appreciation in 2025. At $340,000 median price point, it was completely flat. And unlike the metro as a whole, closed sales were down, meaning that the number of transactions that occurred last year in College Station were down by 3.5%, slowing buyer activity, and active listings up 23.3%. So higher average active listings, lower closed sales, and months of inventory at 3.8. Yes, that is less than the 4.4 we saw for the metro as a whole, but 3.8 is up 1.1 from the year prior. What we are seeing in College Station is a huge slowdown from a very hot market. Little history lesson, back in 22, College Station was on fire. It was on pace with the level of craziness that we saw in Austin, not quite, but it was dang close. And so to come down from that ridiculous high requires some pretty aggressive numbers, and that's why we're seeing closed sales down, active listings up, and that huge jump in months of inventory. This is a trend we've seen for the last 2 or 3 years. But the question is, how did Bryan weather the 2025 storm? And the truth is, Bryan had appreciation, guys. Bryan, Texas, despite being a lower median price point at $285,000, so considerably cheaper, but that might have been its saving grace. Because it's a less expensive market in a time when housing is unaffordable, we were able to see appreciation. The median price appreciated by 1.4%, beating the metro average. Closed sales were up, increased buyer activity. Active listings are up, a trend we saw, but at only 10.4% increase, the active listings aren't up as much in Bryan as they were, relatively speaking, in College Station or the metro as a whole. And then months of inventory at 3.7 is less than College Station, and believe it or not, is down from last year at this time. Or last year as a whole. The point being here, guys, is Bryan was a more resilient market in 2025, and in my opinion, it has to do with the lower price point, but I want to know your opinion. Would you buy in Bryan or College Station? Would you invest in Bryan or College Station? And which town has more potential in 2026? And why did Bryan beat the socks off of College Station in 2025? But of course, we're all one big happy family. So let's see how our local market compared to the state as a whole. As I mentioned before, our appreciation, 1.2% in the Bryan and College Station Metro. The state, with a median price of $335,000, very close to median price in College Station, is actually down 1.2% year over year. So while the state saw prices drop in 2025, our local metro, backed by the strength of Texas A&M, saw a 1.2% appreciation, a price increase. And like we saw, closed sales up 1.1%. So basically closed sales, buyer activity, relatively flat for the state as a whole. Active listings up 23.4%, very similar to what we saw here locally. And their months of inventory, 4.6 much higher than what we're seeing locally, and that's a huge increase from last year. So in summary, guys, our local market very resilient. We beat the state as a whole, so we are a stronger market than what we see as the state on average, and Bryan was more resilient than College Station in 2025. But you want to know what's happening in 2026. I'm going to make some bold predictions about 2026, and quite frankly, just in my opinion, I don't hold much weight to these predictions because I'm not an economist, and even the economists get this wrong. I might as well bring in a drunk monkey and have him throw a dart at a board, but I'll be the drunk monkey for your entertainment. And then next year, you can see how far off I was. We're going to talk about home appreciation, rent rates, Airbnb revenue, and mortgage rates, so we might as well jump in. First, starting off with appreciation. I like to look at history. Historically, we have seen 4.96% appreciation year over year, and I think that we're going to see continued price growth in 2026. In 2024, we were at 4%. In 2025, as I just said, we were at 1.2%. I believe that 2026 will be stronger than last year, and that's due in part to lower mortgage rates and overall increase in buyer activity that I just mentioned. So let's say 2.25% appreciation for Bryan and College Station in 2026, an increase from last year, but still well below our average 4.96. Rent rates. Guys, I think rent rates will increase. I wouldn't be too aggressive on rent rates, mostly because, again, we generally have a slowing market, but because of houses that are unaffordable, we will have a little bit of a pent-up demand for rents, right? Folks who would be buying houses are not because they can't afford it. And as such, increased demand, limited supply means that rates should increase. If you have an existing home, I would feel comfortable with a maybe 2% increase when you're renewing your tenants. And if you're listing something on the market, expect that you can get more than what you got the year previously. Of course, this is a difficult one to figure out. So really it's specific to your property and the neighborhood you're in. And I can help you out with that. In the description below is a link to my calendar, a quick 30-minute strategy call, and I will get you on at least headed in the right direction to make smart decisions about your rental rates. Up next, let's talk about Airbnbs. Quite frankly, and very open, guys, my Airbnbs didn't do so great in 2025. Our revenue was down by about 10%. I think a lot of that has to do with a not so favorable football season. In 2024, we had George Strait concert, we had the Mexico-Brazil soccer game in the spring, and then we had a football season that capped off with a home game against Texas, a rivalry that had been on pause for nearly a decade. And then this year, we didn't have many strong home games, in my opinion, despite having a pretty good season. But I think that the fact that we had a season that ended as strong as it did, well, was as strong as it did, didn't end the way we wanted it to, but I think that'll carry over into 2026. Plus, we've got some pretty good home games. We've got Kentucky, Arkansas, Tennessee, and then we end it with Texas. So our home schedule is pretty strong. We've got pretty good momentum coming in from last season, and we have another spring event. In 2025, nothing happened in the spring in Kyle Field, but in 2026, the Savannah Bananas are coming to town. That's right, they sold out the stadium in just a few days. 102,000 tickets have been sold. That will bring in some more revenue. Of course, we've always got graduation and ring dunk weekends. So I think our Airbnb revenue will be up in 2026 compared to 2025. That's good news. The only caveat to that, I'm gonna throw this out there, is the change. I don't know if you saw this, but Airbnb changed who pays their fees. It used to be split between the guest and the host, and now they're putting that all on the host. To be determined if that will affect your revenue. I expect that hosts will simply increase their daily rate, but I will have a more in-depth video on that later, further down the road when I see how that affects my actual Airbnbs, and I'll share that data and that information with you when the time is appropriate. But let's jump into mortgage rates, because this is probably the biggest factor affecting our housing market going into 2026. All right, guys, mortgage rates, they're kind of complicated. What drives the mortgage market and what drives mortgage rates can get kind of confusing. So I recommend you go down in the description below. There's a link, and I'll send you a PDF that kind of is my breakdown, my rough third grade understanding of what drives the mortgage rate market. And so if what I'm saying today is confusing, reference that, and then you can start building your own assumptions about what's going on with mortgage rates. As far as resources, I highly recommend, if you want to follow along in 2026, utilize Mortgage News Daily. It is a great website. website giving you both news and the most up-to-date mortgage rates. I also recommend that you follow Moody's Analytics Inside Economics. Mark Zandi is their chief economist. He's a very, very smart dude. I listen to his podcast every single week. I'll have a link to his YouTube channel in the description below. I recommend you check him out. He'll let you know what's going on in the economy. They also talk about the housing market. And of course, I will keep you posted on what's going on locally. Between those three resources, you will be the smartest person in the room when it comes to mortgage rates and the housing market. Speaking of mortgage rates, my bold prediction for the 2025 mortgage rates is that we will see continued decreasing mortgage rates, much like we saw in 2025. Let's go back one more year to 2024. 2024 was relatively volatile. We started around 6.75 or so. We dropped down pretty aggressively to really 6% and then ended back at 6.75, which is where we started 2025. 2025 did have volatility, but the overall trend was a decrease from around 6.75 down to 6.25. This is all your 30-year fixed for your primary residence loan, FYI. So I believe that that decrease is largely due to data that has continued to come out showing a weakness in our economy, specifically the jobs numbers, meaning our unemployment rate and job openings. Those numbers continue to show cracks in the economy, and those cracks are leading to the Federal Reserve changing course and decreasing their Federal Reserve rate. And that has loose correlations to 10-year bonds. I know it gets confusing, but that is what generally and loosely drives down our mortgage rate. And I think that trend is going to continue. I don't see a scenario where our economy does a major rebound. I think that we're going to continue to see general softening going into 2026. And if the economy continues to soften, then mortgage rates will continue to come down. My bold prediction is that we go from around 6.25 to another 0.5% decrease, and then we end 2026 at 5.75%. Write it down, check back in with me in a year, and throw a comment down below. If you're watching this in 2027, let me know how much of a drunk monkey I really was, or maybe I crushed it. If so, give me a big thumbs up. I appreciate it. So guys, that in summary is your update. I just told you that Bryan and College Station is a resilient metro. I told you that the low price points in Bryan made it stronger in 2025. I told you we beat the socks off of Texas as a whole. I told you we'll see appreciation, although it'll be slow in 2026, that rent rates will increase, Airbnb revenue should increase, and mortgage rates should creep their way down. Hopefully that gives you some hope for 2026. But most importantly, I want to hear from you what you think is happening. So go down in the comments below, let me know your bold predictions. Then while you're at it, hit the like and subscribe button. And until next week, when I drop that next video, you take it easy.